All right, good afternoon, traders. This is Christian from Hertz, Tribeca Trade Group, and it is Thursday, March 14th. This is a day before quadruple witching, which takes place every Friday. It's the third Friday of the month every quarter. So this happens March, June, September, December. Previously I had a video about what quadruple witching is, but it's always good to kind of do a refresher. So tomorrow you're going to hear that term a lot. And I think people kind of throw the term around. They kind of know what it is. Maybe they don't know what it is. But I wanted to just spend a few minutes just to kind of give you a little bit of depth behind that. And so that you can kind of get an understanding, get your arms around what happens on this day, why it's so much volume, what you should watch out for, and what to take note of, right? So for the most part, this is really an institutional trading day. So I'm going to get into that with the number 2 bullets for who are the traders. But if you basically just want to know what this is, it's very simple. You could just Google, what quadruple witching is, and it's amazing, right? That you could just there's so much data on Google. Sometimes people don't realize, but if you Google quadruple witching, you'll get the very simple definition. So here's where I'm going to go into a little bit more detail. So first of all, it's 4 things. It's actually 5 things, but most people talk about the 4 things. The 5th thing people don't know that much about, and that's where I can kind of add some value than just straight the definition. But the 4 things that happen for quadruple witching refers to stock index futures as well as single stock futures. Those expire on the open. So you get 2 of the 4 out of the way right on the open. So what does that mean when futures expire? Well, so if you go to my Bloomberg screen, just look at what's known as the S&P futures, right? A lot of people trade these, and sometimes people understand them, basically enough to trade them. But what happens here is that the contracts go away every quarter. So they're quarterly contracts. So how do they expire the contracts? Well, that's the quadruple witching. There's something that's called the SQ price, special quotation, and that's the official expiration of the S&P futures. So remember, when people say S&P, the index, the futures, they're all linked. Now there's several other components to them, for futures, and that's a whole nother subject on what the components of futures pricing is. But the tracking is the S&P. So it's an index of 500 names, and those names are the futures as well as the index is made up of 500 names in given weights, right? In the case of the S&P, it's a float weighted market cap index. I think I said that right. But basically market cap is what you want to know. So if you break down those components of the future, you're basically just dealing with 500 contracts on expiration. So what has to happen? Well, for a lot of what's known as Delta One trading desks, now this is what I used to do, and this is why I like doing these videos, because I did this for a number of years on an institutional trading desk, right? I used to wear a lot of different hats in my background, one of which was Delta One trading, right? Sounds like a great Chuck Norris movie, but Delta One essentially means it's so there's no optionality. So there's no Greeks. Delta is 1 for 1. So stocks like the S&P 500, if you take the 500 stocks in the right weights, those will add up to an index, right? So 1 for 1, as long as you've got the right increments. Same thing with futures, right? So these are, and same things with ETFs, right? An ETF is just a basket of securities. If you lump all of those components of an ETF together in the right weights and increments, it's basically 1 for 1, the basket versus the ETF, right? So that's all under a Delta One umbrella, and every investment bank has a Delta One desk as well as a portfolio desk. Those are the 2 desks that have to deal with the future, well, mainly Delta One for the futures expiring, but for quadruple witching days, it's basically those two desks that are predominantly doing all of the trading. For those desks and what I used to do, it's the busiest day of the year for them by far and away. There's just a ton of things that have to get done on a Delta One desk. You cannot tackle a Delta One trader, or to get a hold of one, you would have to basically tackle a Delta One trader on those days. They are there in the morning, in the wee hours of the morning, and by the end of the day, what we used to do is all get drinks together, because you're literally the busiest traders on the street for those days, and meanwhile everybody around you is just doing their normal kind of things. So in any event, what Delta One traders will do is, because of, there's usually an arb between the contract and the underlying index. So what'll happen is, and what that special quotation pricing is the underlying price of the futures that go out on the open of Friday will be what the prices of all the underlying names in the basket, what their opening price is, right? And there's a little bit of a calculation in there, which again, I'm not going to get into because it's way out of the scope of what I want to talk about. But all of that, so there will be huge volume on the Friday open, because index traders will basically, if they have a position, and for the most part, most traders have rolled their contracts over to the next contract, which in this case is June. However, Delta One traders will actually be buying and selling baskets of stock versus S&P futures contracts. So this way they have, if they were long stock in short futures, the futures will go away and they'll have to actually sell stock to go ahead and get rid of their position. So again, it's so that they have no exposure, right? For the most part, Delta One desks, they don't want to take exposure. They're basically, they're hedged for the most part. All right, so that will happen, and that volume will all go away on the opening. So a lot of orders will be placed market on open, and then some traders will actually arb the open after the first 5 minutes. But you'll be looking and you'll say, hey, what is all this? What is all this volume on Apple, on IBM? It's basically because of the special quotation pricing and the market on open trading that has to happen for index futures expiration. Okay, and also there are what's known as single stock futures. They're not traded as much as I think they used to be, but those also expire on the open. So once you get through the open, two witches are gone. The other two witches are, things that you probably know already, right? It's also you have options expiration, which I think is right here. They talk about that. Options, quadruple, focusing on offsetting, closing, rolling out positions, so on and so forth, right? Index futures, single stock futures, while stock option contracts and index options expire on the, so that's on the close, right? So that's kind of the usual volume that you see every month, month to month for options expiration. However, the fifth witch, right? So I think everybody knows that so far, but the fifth witch is actually index rebalancing. Right, so what happens every quarter is, and you could go to the S&P website, and they have a list. If you go right to, let's see, where was I? Right to their homepage, they will have announcements. Right, and they'll talk about one-off trades where one name is going in, one name is going out. However, what people don't realize is the whole index has to get adjusted. So why is that? Right, so if you look at the S&P index, right, and this is a market cap weighted index, float adjusted, and what'll happen is they need to adjust or make sure that the benchmark weights are exactly how they should be. And how do they do that? They go ahead and every quarter and they basically do a calculation and say, okay, based on the current prices, based on the market cap and the float, this is how the weighting scheme should be in each index. And this happens, and by the way, for futures, it's not only S&P futures, but it's also NASDAQ, Russell, all of those futures contracts go ahead and expire on the open. Same thing. So for the index rebalancing, it's basically all the major indices except for Russell. Russell only rebalances. So IWM that you're familiar with, they do an inclusion and deletion once a year. That happens in a couple months. But the S&P, NASDAQ, so all the major indices, like besides the S&P 500, all the growth indices that they manage, all the value indices that they manage, big kind of mega cap, and then all your sector ones, right? So your XLF, your XLE, your XLK, all of those have to change back to their they basically get struck back to their benchmark weight. So between now, or let's say the last index rebalancing, which was December, what's changed from the last time that they did this, right? Well, the shares you could see in the right, the position, and yeah, basically these shares do not change at all until the next index rebalancing. What's the variable that changes? Price. So some names actually will float higher than the weighting scheme should be, and then what happens is the larger weights, just because the price has gone up. Some names have gone up in price, some names have gone down in price, right? So just because of that alone factor, a name could become a higher weight just because the price has gone up or the price has gone down. So they want to actually put that back to the benchmark weight. You could also see this in things like XRT, right? Because besides XLF and XLK and all the major sectors, there's also they're equally weighted sectors. Those are not market cap weighted; those are equally weighted. So a whole different set of indexes and and this is good to know for background. When you buy an ETF, you should always know what you're buying, not just the name of the ETF. Very, very important. But if you look at the components of, let's say, XRT, you could see that Carvana, Boot Barn, Wayfair, why are they the biggest weights in here? Because over the last quarter, they've been your biggest names that have rallied. Believe it or not, JCPenney's up there too. Abercrombie's, right? So these are all the winners. Etsy, right? So if you go to the ones that are on the bottom, right? What's on the bottom? Land's End, probably names that you're not that familiar with, Macy's. These are the ones that have underperformed, and they're a smaller weight because the price has gone down. Taylor Brands, which just had earnings, which stunk it up, was down like I think 20%. Kroger had earnings, right? So these are all smaller weights. So provided that the index manager S&P keeps those names in there, all of these names will have to be increased. So they'll actually have to go out in the open market and buy. As long as the net interest isn't larger in this ETF, all the losers will have to be bought, and all the winners will have to be sold. Right? So Carvana, Boot Barn, Wayfair. Now again, this is just one index, so you have to kind of lump this together with all the other indexes. So Carvana may be in 15 other indices, so you really have to think about all the other indices that Carvana is in. But these announcements were made for the index rebalance last Friday, right? So the portfolio traders on the institutional desks, they've been adjusting to this so that they don't impact the shares too much on Friday. There will be some impact, but it's very well gamed ahead of time, even before the official announcements come on. But so, being that all these indices rebalance, you will see huge volume through the day tomorrow. So we'll go back to my. So who are the trades? So I mentioned the 5 witches, right? And talked about the time frames. You'll see heavy volume on the open. You'll see heavy volume on the close. Again, that index rebalancing all gets footed to the closing print on Friday. So that's why you'll see the biggest volume. It'll kind of ramp the volume into the close. Again, some people will index traders, portfolio traders, Delta One traders, they won't just put all the volume on the close because it's too much. So what they'll do is they'll be trading it into the close all day long, especially in the last hour of the day, right? So what to watch for? I think I covered all the parties. Again, this is what I used to do for years. So you can ask me, you're free to ask me questions. You could just reach out to me on Twitter if you have any questions. But I used to do this for years. So what to watch for? Big volume on the open, big volume on the close. Some names, and you'll hear this from people. You'll say, "Hey, I see all this volume in this small cap name, and there's no news on it. What's going on with it?" It's because of the index rebalance. Especially some names that are going to be added. If you go back to that XRT, like XBI is another one that's an equally weighted index. So biotech, If they decide to kick out a couple names, they usually delete and add names, maybe two or three different names. That will actually cause more volume when a name gets added or deleted. So there's usually like two or three adds and two or three deletes, and then everything else gets reweighted. So what to take note of. So also, when you're doing your analysis, I know a lot of, myself included, chartists, technical analysts, they like to look at volume, right? And I see this every time after quadruple witching. I see traders falsely making assumptions about, oh, geez, look at the volume that happened in this single stock. This could be something, it could be breaking out, it could be breaking down. I've got confirmation. Every name will will be trading higher than normal. In fact, I will tell you, my prediction is that tomorrow, what's tomorrow? Tomorrow's the 15th of the month. You will see the biggest volume of the year. So far, right? And then you'll see it again in June, September, and December. But it'll be the biggest volume of the day, biggest volume day of the year, I would imagine, or if not, very close to it. What else? Dow, just to give you a little bit more background, the Dow doesn't rebalance, right? It's a price-weighted index. They don't do any rebalancing except for one-offs when they decide to bring a name in and kick a name out. It always stays 30 components. So the Dow really isn't involved in this. It's all the S&P and the NASDAQ indices. All right, so that's it. Quadruple witching and 15. And again, it's actually 5 witches that happen. But again, the people who don't necessarily do that or don't have details about it, just don't know all the facts behind it, which is fine. But there it is in about 15 minutes, the intricacies of quadruple witching. Thanks for watching and have a great day.